Should you set up your UK business as a sole trader or a limited company? There's a bunch of differences between them, and in this video we're going to talk through the differences, the pros and cons of each setup, and then I've got a couple of bonus points that I'll go through at the end as well. Hey, my name's Sarah, I'm from Fruitful Accounting. I absolutely love talking about all things business, accounting and tax. I'm a chartered accountant, but these videos are for information and education purposes only. With that disclaimer out of the way, let's get talking about a sole trader. Now, if you're a sole trader, you are self-employed and you and your business are one. There is no separation between you. Anything the business earns belongs to you immediately, and anything the business owes is your responsibility. That means your personal assets could be on the line, and you may even have to sell your house to meet the business's obligations. That's not great, but there is a huge pro of being self-employed, and that is just how administratively easy it is to set up. If you want to be self-employed as a sole trader, you just tell HMRC and register with them for self-assessment, and off you go. Track your sales, track all your business-related expenses, and then once a year, do the maths to work out how much you've earned, and that goes on your self-assessment tax return. You may also need to register with HMRC for classes 2 and 4 national insurance too, but that really is it when it comes to the admin. So the big pro is the simplicity, and the big con is the fact that you and the business are one. You also need to be aware that there will be a time, if you're doing really well, when you'll need to register for VAT. So the VAT threshold has recently increased. On the 1st of April 2024, the VAT threshold went from £85,000 to £90,000. To work out whether you need to register for VAT or not, you look back over your trading for the last 12 months and you see what your sales are. So for example, if you sell this mug for £15 on somewhere like Amazon, Amazon won't pay you £15, they will pay you after they've deducted their hefty Amazon fees. So they might say the fees are £5 and Amazon will pay you cash of £10. When you're tracking your sales for the purposes of VAT, it's the £15 that you sold that mug for. That's the important number. And you're not going to like this bit. You also need, or should, track the VAT that you would be responsible for under reverse charge mechanism if you were VAT registered. That also should be layered on top. There'll be more videos coming out about that, so don't worry about that one for now. Let's talk about limited company. So with a limited company, you and the business are two very separate legal entities. The director and the shareholder, which is probably you, is not the same as the company. And the company is the one who is responsible for any obligations that the business takes on, and your personal assets should be safe. Should be. If you take out a personal guarantee for a loan, or you fail to comply with all your director's duties, then you may find that you've got some personal liability there as well. So some benefits of a limited company. Operating as a limited company carries a specific brand image with it that can be quite strong. It implies that the business is being responsibly managed because there are certain directors' duties that have to be adhered to, and that can be really good in terms of giving confidence to your customers, your suppliers, and if you want to raise funds one day, your investors as well. Another benefit of being in a limited company is different share classes. So if you're to go into business, say as a husband and wife or with some business partners, you can set it up right from the start with different share classes so that if you've got different tax situations going on, you can have different dividends and distributions from the company. That might be more tax efficient for your circumstances. So you've got more flexibility. But the cons, there is more admin, there is more filing, you probably need an accountant right from the start. Every year you'll have to file a confirmation statement, annual accounts to Companies House, a corporation tax return to HMRC, and then you have to think about what is the best way of extracting the cash from the business. Because when you're a sole trader, you and the business are all one. If the business earns any money, it's yours instantly and goes on your personal tax return. Similarly, if you're a sole trader and you make a loss, that loss is deductible from other earnings that you have made in the year. However, if you're a limited company, those profits or losses belong only to the company, and how you take them out the business, or how you take the profits out the business, you could do it through salary, you could do it through dividends, and you could do it through a repayment of a director's loan, but those things need more help and advice than the sole trader setup. The other big disadvantage to limited company is just how much information is publicly available, and this is quite significant. So the documents on Companies House are available on public record that anybody can look up. So anybody can look up the directors and the shareholders of the company, the registered office address, when the public filings have been made, for example, your accounts. They can look at your balance, see a rough idea of the value of the business, and pretty soon they're going to be able to see your profit and loss account as well, so the volume of sales that you've made and also your profit. Lastly, let's have a few bonus points. You need to think about number one, mortgages. If you're employed, when you want to remortgage or apply for a mortgage for the first time, mortgage providers will generally ask for the last 3 months of your pay slips. And that's enough. That's enough to prove your earnings and to prove whether you can keep up the repayments on a mortgage. However, if you are self-employed as either a sole trader or as a director of a limited company, mortgage providers see them as the same. You will be required to provide accounts that go back 2, maybe 3 years. So it's not that hard to get the data they want, but if you're planning on getting a mortgage within the first year or 2 of going self-employed, you may run into difficulties. You would need a specific mortgage broker that looks after that situation and knows special mortgage lenders that will lend to early self-employed people, and you may have to pay much higher rates than somebody who is employed. And that's just something that you should be aware of. If you need to remortgage and you're thinking of starting a business, it might be worth remortgaging while you're still employed. The other thing to think about is Amazon. If you are selling on Amazon and you start out as a sole trader and then you become a limited company, you will have to tell Amazon seller support and they will change the business model that they are operating you on. Telling Amazon seller support anything is not a particularly fun experience. So I would always suggest to Amazon sellers, be a sole trader when you're doing product research and you're starting out, but as soon as you've found a product, you want to negotiate with suppliers and you want to start opening your Amazon seller account, be a limited company already. Like, sort it out first, because if you want to change from being a sole trader to limited company on Amazon, telling Amazon seller support, firstly, they may hold any disbursements in reserves and not allow you to make disbursements while they verify and change your account. And secondly, they may reject your first application to do it. It could take months, and it's just not an administratively easy thing to do. Nothing is administratively easy when it comes to changing situations on Amazon, whether it's your address, going VAT registered, or moving from self-employed to limited company. I would always advise 2 things. Number 1, before you start the process, make sure you've got a lot of supporting documentation to hand. So we're talking 3 different separate sources that prove the change. For example, 1 from the government, so HMRC or Companies House, a letter with your company name, your registered office address on it, maybe your tax identification number, your UTR as we call it in the UK. You might want something from the bank, and thirdly, a supplier invoice. Once you've got all those to hand, then make a disbursement for all the funds that are available to you, let that cash hit your bank, and then at that point, tell Amazon seller support what it is you want to do. Because if they reject the first piece of support that you send them, then you know that you've got 2 others ready to go and you don't have to wait a whole month for another bank statement. The third thing I want to talk about, the last point, is B-Corp. Now, if you believe that business can be a force for good, and if your business has a profit-seeking motive that is sort of equally balanced with a purpose and a mission, then you might be considering applying for B-Corp status. B-Corps are companies that are purpose-led, and they voluntarily apply for the certification as businesses that are meeting high standards for social and environmental performance, transparency, and accountability. In order to be eligible for B-Corp status, you must operate for profit in a competitive market and have at least 12 months of operations. If you're a limited company, you don't necessarily have to have the 12 months of operations. You can apply for something first called pending B-Corps. However, if you're a sole trader, that option is not available to you. The other point that's worth noting is that if you're a sole trader, you can apply for B Corp status, but you won't meet the legal requirement. Because you don't have the legal documents such as articles of association that a limited company has, you will miss out on the 2.5 points that are associated with the B Corp legal requirement part of the application process. So just something to be aware of if you're thinking about B Corp status, you might want to go down the limited company route. So I hope that was helpful. If you're interested in B Corps, then let me know and I can do a separate video that goes into detail on them. They are becoming increasingly popular and with good reason, and they're also well known. So I did want to draw attention to the differences between what a limited company and a sole trader can do. Hopefully this was really helpful, and I look forward to chatting with you again soon. Bye!